Okay, good afternoon, everyone. It's great to be here to talking to you about the life sciences, such as a buzzword across the commercial real estate markets around the globe. So over the next 15 minutes, I am going to walk you through about what we are thinking about the life sciences development opportunity in the region, what the occupier strategies, and then what does it mean for the investors. And of course, that the back of the bulk of the work is conducted by the CBRE research team in Hong Kong. So should you have any further questions, please feel free to reach out. We do have a lot more in-depth conversations and information. And then let's crack on the slide. Hold on. Okay. So first of all, let's talking about setting the background, talking about the growth momentums. I think one thing we love to talk about life sciences is all related to COVID. When we're talking about the COVID, it's all coming back from the vaccine development. I think as of by the end of June, we do globally, like the 8 types of vaccine has been approved by WHO, which I want to highlight here is 3 out of those 8 are developed in Asia Pacific. 2 of them from mainland China, 1 of them from India, but nevertheless, 3 out of those 8 are coming from our region. That demonstrates to you how important it is for our own region to have our own life sciences development capabilities. So when we are talking to those major companies, talk about Moderna, Johnson & Johnson, you talk about Pfizer, and that they want to see, we want to come to Asia. They are in Asia for such a long time, but they continue to looking for opportunity in Asia. Why Asia Pacific is so important? Because we do have a huge growth potentials in our region. I think on the far left-hand side chart, it shows you the population growth. If you look at the population growth, you can see we do have a stronger population growth compared to United States, particularly leading in by Southeast Asia, Australia, as well as Australia. And we're also having some aging population issues, particularly driven by mainland China, Korea, and also Japan. So the fast-growing population with aging issues will demonstrate a lot of population growth. The second one is almost health-related issues about rate of obesity. So you can see most of us in Asia tend to be, okay, but you can see people down in South, in Pacific, they do have a higher rate of obesity, which is very, very similar to what we have seen in the US, health-related issues. The third one is more serious, is about the death rate from the heart-related diseases. So you can see our region, particularly, you can see India, mainland China, those emerging major markets, the death rate is so high. As a result, we are expecting to see those life sciences companies want to come to our region is because of those underlying factors to support the growth. So for those companies, they also want to thinking about, okay, I want to come into Asia. I understand those variables to drive the growth, but how about the actual money? Do you spend enough? Is from lower basis or higher basis? So this is slide just to give you the dollar sense in terms of the potentials for life sciences. The first chart on the left-hand side shows you the health expenditures as a percentage of a GDP. So we're using the US as the most advanced one as the benchmark. You can see 17% of the GDP, the health expenditures are coming from, let me rephrase it. I think US has spent 17% of the GDP into the healthcare related expenditures. It's around 3.5 trillion US dollars. And if you look at our region, the highest proportions is Japan. They only spend 11% of the GDP. And then for the second biggest pharmaceutical markets in the world, mainland China, they only spend 700 billions, and which is only 5% of the GDP. So you can see the potential is massive. If we are looking at health expenditure per capita, US is more than 10,000 per annum per capita, and the highest one is Australia in our region is 5,500. And you can see it's only 50% of what people are spending in the US. Huge potential as well. Take 2 boxes. The third one, when we are talking about the drugs export, You can see the US export globally, the value is around 24 billion. And in our region, the India is outperforming. It's only 15 billion. But rest of the market in terms of manufacturing is significantly lagging behind what we are seeing in the US. So therefore, all those factors together from the demographic point of view, health related to the performance economical factor point of view, it creates a huge potential for this sector to develop in Asia Pacific. So that's talking about the life sciences and occupier market, what life sciences means in Asia Pacific. I think in our studies, and we don't include in hospital, we don't include in all those senior care, they are not part of life sciences. What we talk about life sciences is 4 dimensions. Start with the corporate offices, and the second part is R&D labs, R&D facilities, and the third one is the logistic and the cold storages. The fourth one is manufacturing facilities. So life sciences, including those 4 different categories. Let's start with the corporate offices. I think the corporate offices, we saw the strong demand that has been coming from these particular sectors from 2020. I think across Asia Pacific, office leasing for 2020, it was down by 25%. It was down by 25%. And for these sectors, the last year's leasing was actually up by 17%. I just want to give you the ideas of how vibrant this sector has been performed in 2020. However, there are a divergent trend coming from this sector. If you're the multinational, the big companies, what we are seeing is they are moving into the consolidation mode. They want to consolidate their portfolios to improve the efficiencies and try to save the cost. Okay, that's multinational companies, they're thinking about it. But when we are looking at Asian-based domestic life sciences companies, it's completely different. It's largely driven by the expansionary mode. And then when we are looking at the 2020 data, Shanghai and Beijing is the most aggressive ones coming from in terms of expansionary demand. So when we are looking at lots of MNCs, they try to consolidate, they try to optimize their portfolios. So you can see they are no longer want to be in CBD. Quite a lot of those companies moving to CBD fringe and the decentralized locations. And so they're using more of a satellite offices and flight to quality. That's what we are seeing from the occupier trend in terms of corporate offices. That's one. Let's now moving to so-called R&D lab. I think first of all, if you look at the headline, there's over 100 million square footage of science park facilities across Asia Pacific, based on our estimation. But it sounds a lot, 100 million square footage of spaces, but compared to the US, we are only a third of the size of a US facilities, okay? The second one I want you to draw your attention is that we're looking at those major hubs across the market. You can see the most famous one, it's probably for a lot of investors, Zhangjiang High Tech Park in Shanghai. And then we also see the Biopolis in Singapore, and all the way to Australia, we can see Parkville in Melbourne and Macquarie Park in Sydney. But one thing I really want to highlight is the bottom layers. You can see for life sciences, that's kind of facilities, particularly the R&Ds, the ownership sometimes are highly restricted. You can see quite a lot of ownership are private, public partnership ownership. Only some of them allow for so-called private owned. The allow for private owned largely happen in Japan as well in Australia. But you can see for China, for Korea, for Singapore, they allow certain level of a private ownership, but there are some restrictions for the transactions. But nevertheless, you can see R&D is a big focus with all the governments try to incentivize the R&D facilities. We are going to see more facilities to be developed in the short to medium term. Second one. The third one is a lot of everyone's conversation is cold storage. And but cold storage, that's a forget about life science related cold storage for a second. If you look at the left-hand side chart, just want to give you the ideas of our current demand and supply pictures in these sectors. In Asia Pacific, you can see on the left-hand side, the cube size, we are significantly lagging behind. So in order for us catching up with the US, we will need to build another 410 million cubic meters of cold storages in the future. 410 million cubic meters is massive, okay? So that is something we had a huge imbalance of demand and supply. But if you look at the right-hand side, for vaccines, we don't really need to have a massive cold storage facilities in each locations. I just using the GLP, the logistic funds as examples, look at the tenant profile. If you look at our life sciences related into their portfolios, only account for 2%. Yes, this is important, but I don't think this should be around the stories about you want to develop the cold storage because of life sciences. It's not the case. I think life sciences want to take on more spaces and the cold storages because of the vaccine development. So you can see the recent examples that the companies, Fosun Pharma has already built 2,000 square meters of cold storage near Shanghai Pudong Airport, specialized for BioNTech Pfizer vaccine. In Hong Kong, the Cathay Pacific also putting aside 2,000 square meters of a cold storage facility, again, for the same reasons for that. So that's why you can see, yes, it is important for life science companies, but they shouldn't be the major component into your portfolios from the investor's point of view. And the fourth one is all about manufacturing. I think the manufacturing capacity is definitely catching up. I always love to say our Asian economies, and last year we did fantastic well. We are hero. We are really leading the COVID situations. Unfortunately, in the second half of combating with COVID, we are from hero probably to zero. The reason is we don't have enough vaccines. So you can see the supply of lots of medical products is getting very important. So you can see this is just a classic example of what we've been hearing from the news. You can see BioNTech is going to setting up more production line in Singapore, in Shanghai. Moderna is going to have a production line in Korea, and you can see AstraZeneca is also having some production lines also in Australia. So manufacturing capacity in our region will catching up from the occupier point of view. So we're talking about so many things from the occupier point of view. So where are the life sciences hub clusters across Asia Pacific? So CBRE did a proprietary research framework. We look at 12 different variables from all the way from the sales functions to the R&D capacities, logistic network, and the manufacturing capabilities. We are ranking for 1 to 5. 1 is the weakest, 5 is being the strongest. So this is the result for all of you. So you can see we had the 3 different dimensions. We got a comprehensive market, front offices, and a manufacturing hub. The good thing is a comprehensive market, including Shanghai, Beijing, Tokyo, Singapore, and Melbourne. And the Sydney, Seoul, and Hong Kong, they are the front office, the sales offices. And India, as of now, we're thinking they are a manufacturing hub. But don't be surprised, India, we are catching up because we know India is producing quite a lot of drugs. They also enhance their R&D capabilities. So I do believe India will be coming from manufacturing hub more closely to a comprehensive market in the medium terms. So that's the hub. So how about if you are the investors, what are the investment opportunities in our regions? But first of all, looking at the left-hand side chart, this market has been hot. If you look at the global equities, venture capitals in these sectors, I think last year, 2020, we see more than 3,000 deals coming in these sectors. And that's why huge capital tracing. Why they are tracing for real estate is all about the performance. So if you look at the right-hand side, we look at the US. There's 2 specific US REITs, all life sciences related. One is Alexandria, one is a Health Peak. You can see from the chart, they all both outperform the office REITs. So therefore, the resilience of these asset classes and also the outperform for office markets. So more and more investors are coming to these asset classes. And this is just an example. US market has been so transparent and so hot in the life sciences. So we look at the deals pretty much across Asia, across US, and then what about the cap rate? You can see on the right-hand side, if you look at the Boston, it's 1/2 because of such a strong R&D capacities. The cap rate was trading at a 4.5%. If you look at the West Coast, another hub is in San Francisco. The cap rate is trading at 4%. It just gives you the ideas of how hot this asset class is and how the lower cap rate has been seen in the US market. So how about the Asia Pacific? So Asia Pacific in a region, you can see on the left-hand side chart, we don't have many deals. As of end of last year, we only had 700 million in transactions, which is less than 1% of our regional total. But we do believe in the medium term, it will be trading up to 2 to 3 billion going forward. But most of the deals happen in two markets, which I want to highlight to you on the right-hand side. So you can see most of the deals actually happen in Sydney and Japan, Australia and Japan. So a lot of deals are coming from sell and lease back, because you can see a lot of pharmaceutical companies, they want to dispose their assets and lease back to focus on R&D capacities. So the deal flow is low for now compared to the US. However, it's definitely trending up. In the medium term, we're going to see billions of transactions on an annual basis. So if you want to invest into these asset classes, there's 4 ways for you to consider. Number one is the sell and lease back. We've been highlighting it's very easy to engage that spaces. We have been seeing so many deals happening in Japan, Australia. The next one will be Korea. So if you're interested in these asset classes, want to do sell and lease back, thinking about Korea, we are seeing more deals coming through. The second one is all about PPP, public-private partnerships. We're talking about R&D capacities across the region is lagging behind in terms of supply. So therefore, you need to work with the government to create more life sciences related facilities. And that opportunities will happen pretty much across our region. But bear in mind, they will have some restrictions when you want to exit, because they want you to hold the asset for a number of years. The third one is all about build-to-suit asset development. And we saw the pharmaceutical companies, they do need to have their places, facilities, but they don't want to build. So they're working with the investors and developers to build the facilities suited for their headquarters or everything they need. I think the classic example, what we are seeing is a Stockland in Australia, build a headquarters for Johnson & Johnson. The final one is all about asset conversion. I think we do have quite a lot of aging industrial warehouse, aging office buildings. So more and more, we are seeing a lot in the US to see the asset conversions coming from the office into the light R&D facilities. And then we see that kind of conversions more likely to happen in Hong Kong and Japan. But do bear that in mind. When you want to convert into the life sciences related assets, you do need to meet extra criteria: water, zoning, ceiling height, air, as well as electricity. So asset conversion is not as easy as we're seeing. They do need to meet quite a lot of regulations. I'm conscious of my time, so this is my last slide for me. So if you are the investors and you want to deploy your capital into these asset classes, and that's, we talk about life sciences, all about corporate office, all to the manufacturing facilities. But if you're the core fund managers, you're looking at the core plus returns, thinking about the corporate offices, the front offices is something you should start looking to that. And the opportunity is largely happening in China, Australia, and Japan. R&Ds is more suitable for opportunistic and the developers. So all those major sciences park is super important. And if you look like at the cold storages, I think cold storage should be all your overarching stories. It shouldn't only fit for life sciences, but most of the supply we are expecting, you should be focusing on is Korea, Hong Kong, and potentially in mainland China, of course, Australia as well. The final part is enhance your manufacturing facilities that are more suitable for opportunistic type of capitals. And then we have already seen a few deals are happening in India. I think India will continue to the major play on that part. We're also expecting to see the wrapping up capabilities for mainland China as well. So you can see this asset class is very new at the initial stage within Asia Pacific. So there's a tons of conversation we can have. So we only had 15 minutes. So this is a quick overview of what the life sciences development and real estate in Asia Pacific. And if you have any questions, please feel free to reach out. We're more than happy to share more insight with you. That's it for me.
Thanks very much, Henry, for a very informative presentation. As Henry also mentioned, this webinar was recorded, and if you have any questions, please feel free to reach out to ULI, and we will connect you with Henry directly. Hope you all enjoyed today's presentation, and have a lovely day. Bye, everyone. Bye, Henry. Thank you.
Bye. Take care.